Welcome to Forge and Foster's third quarter update. We have two very exciting speakers here with us today, certainly relevant to our kind of current times and an economy that we are expecting to be leading the charge to boost kind of our local economies through this current market. And so today we're very fortunate to be joined by Debbie Spence, who is a business development consultant with the creative industries lead at the City of Hamilton. Welcome, Debbie. And we have Jeff Onders, who is a media entrepreneur. He's founded companies in news publishing, event production, digital marketing, and is a co-founder of the Aeon Studio Group, which is an entertainment infrastructure company. Welcome, Jeff. But as usual, to kick us off today, we will be kind of led off by Alex Manolovich, who is an associate here at Forge and Foster, and he'll be taking us through a very busy third quarter in Hamilton and surrounding area real estate. It's been an incredible third quarter from a real estate perspective, certainly considering the times. And so we're looking forward to diving into that. And then after Alex, Debbie and Jeff will present on film in Hamilton and take us through their respective roles, how Hamilton is preparing for film, how film is impacting Hamilton, and how you can get involved. So I will hand it over to Alex to lead us off through the third quarter market update for Hamilton and surrounding areas.
Thanks, Ben. And as Ben was mentioning as well, it has been a very, very busy Q3. So I'm just going to jump into it. And I thought I'd start off things by saying what exactly happened in Q2, because a lot of things happened in Q2 and comparatively to see how it stands from our previous quarter. So Q2 stages are just becoming a thing. I know it just seems like we've been kind of living in stages our whole lives now, but it just began in Q2. April witnessed a huge job loss, 2 million jobs. That was a record. In total, beginning of March, when this pandemic started, really huge shutdowns, it was 3 million. But in June, the end of Q2, we recovered 40% of those jobs that were lost. That was a record as well, and unemployment rate was at 12.3%. This previous quarter, currently we're all in stage 3, except for some select cities, which are in an immediated or amended stage 2. We've currently recovered 2.3 million jobs, and our employment rate is 9%. And now with the new cases emerging right now, we're expected to potentially see a slight decline in a recovery or even a slowed recovery. So a lot's changed between Q2 and Q3. And I typically just do year by year comparisons when it comes to commercial real estate transactions that happen in Hamilton, as I think quarterly by quarterly transactions are a bit too microscopic to really see the forest from the trees. But in this instance, like I said, since Q2 was such a altering, pretty much life altering, really to say, event and quarter, I thought it was prudent to kind of compare quarter by quarter as well. So the kind of copper numbers really show this previous quarter of Q3, what happened, and then Q3 2019 and Q 2020. So as you can see, we pretty much well stack up from last year. So that's very great news to see that we're on the same pace, more or less, of just commercial real estate transactions that happen in Hamilton year over year, and quite an increase in by month, or excuse me, quarter by quarter. When you do look at it month by month, you see April, May, and August and September are pretty much on par, but July had a very strong July, which really boosted this past quarter. And then when you look at total commercial real estate values worth from year over year and quarter over quarter, this past quarter had a huge number increase, 322 million commercial real estate dollars transacted in Hamilton. And I would say about the average, it is pretty highly flexible about where the values go. But the average is around 200 million, maybe just over that, between 200 and 230. So last Q2, we did see above average of 264. And these are highly susceptible to huge transactions, which is the reason for this case, and in Q2 as well, where we're saying huge numbers. So large purchases by bigger REITs that really put an impact on these prices. So we'll get into that about what those are shortly. So when you do an asset class by asset class breakdown from year over year, You can really see in white was this quarter, gold was last year. How multi-residential really just dwarfs every other asset class it transacted, and that's because there was a number of high value transactions that occurred. But as you can see, actually Q3 had slight increases in almost every asset class. One thing I do want to highlight though is that mixed use and retail did make a slight uptick. This past quarter saw 3 transactions in mixed use. And just to clarify what I mean by mixed use is that it seems to be pretty much a nebulous term now, and it's becoming kind of more in the mainstream of things. But for this purposes, I mean that typical 3-story commercial at grade, residential above. That's what the mixed use designation means. And we haven't really seen that transact since the beginning of Q2. And we've just seen them kind of go through the typical trades just very recently at the tail end of this past Q3. So maybe that's an indication of some retail mom and pop level type of purchaser that are maybe getting a bit more comfortable now in the market, but that remains to be seen going into Q4. So to get into those transactions that I talked about that really impacted this quarter and last quarter, it's multi-residential. That really is king. I know it's really neck and neck between industrial, but in my personal opinion, multi-residential has a slight lead currently right now. And it's purely because of really the foundations that we're living in right now of just very low supply. And we'll get into the reasons a little bit after. But these 3 purchases, these 3 towers were purchased by InterRent REIT, 35 Brock Street and 600 John Street North. They're located more in the north end of Hamilton, northwest. Purchased for $270,000 and $250,000 suites, respectively. Great purchase here too, because as you can see in the background, it's right by Pier 8, which is the really upcoming and expected development with a huge swath of, I think about 1,300 suites are projected for that site. So a great purchase by InterREIT here for prospective value. Collective Arts is there, Bayfront Park is there as well. So in an upcoming neighborhood, I think is going to be fantastic. And in 100 Main Street East, that's right downtown Hamilton. I think it's the tallest building in Hamilton. So they might have that in their portfolio now. $76 million purchase, went for $260 a door. But this is probably slightly less because this value does not take into account to the 62,000 square feet of commercial space that also comes with this purchase. So definitely a value add right in the core of Hamilton, right by the Royal Connaught, and some prospective developments by Leuna. And a lot of these kind of other parking lots that you see are earmarked for other developments too. So great if you believe in Hamilton, great purchases there by InterRent REIT. As you can see, that's about $130 million, give or take, a commercial real estate transaction. So when you kind of figure that into the 300 plus total value that occurred in this past quarter, you can really see how these transactions really influence those numbers. The second largest transaction, if you want to consider those first 3 towers as one portfolio transaction, is 150 Sanford Avenue North, another large multi-residential property, going for slightly less value. I would say definitely that the Sanford Avenue North area is a bit more value add area, if you want to call it that, compared to downtown Hamilton and the north end towards the bay. Went for $26 million total, about $175,000 a door. This also has 0.7 acres of land for, I guess, potential development in the future. And continuing on, the third largest transaction that occurred was 1842 King Street East. This is the Brock University lands in the east end of Hamilton. Huge piece of land, almost 7 acres. It is a lease back for 1 year, which is really interesting. So that means that the university will be leasing back the premises for 1 year. And it was purchased by New Horizon Group, very active developer in the Hamilton region, I should say. Their bread and butter is townhome developments. However, they made news fairly recently about doing potentially the 3 largest towers in Hamilton, which would be located in Stony Creek. And even the purchase price matches their repertoire, $1.6 million an acre. Is typically what you see for pretty much set up low density residential land. It's between 1.5 and 1.7, what you usually see for this type of land. So I'm expecting this to be eventual townhouse development in this neighborhood. And we'll see what comes in a year plus, and eventually where obviously Brock University sees their no home. So the following slides I'm going to touch on are more of a mood board or a sense. I thought there's so many headlines. I routinely see these types of headlines that you're going to be seeing on a weekly basis, even sooner than that. And the big one is residential. I'm sure everyone knows a friend or a family member or anecdotally that someone's trying to buy a house and it's just absolutely on fire right now, whether you're in Toronto or as far as Niagara or Kitchener. It's absolutely crazy right now. And you can see some of the headlines I've highlighted here. Toronto real estate buyers turn to the suburbs, home sales set record high. Here's an anecdote from a realtor from Niagara saying, if I were to have 10 phone calls, maybe 2 would have been out of town. Now it's likely every other call is out of town realtor. I've been hearing from some realtors that they've been listing homes in Hamilton on the Toronto Real Estate Board because that's getting a lot of traction. And again, strong demand, especially for low-rise homes in 905 area. And to see, we're seeing a lot anecdotally, and a lot of the data supports this too. That's a lot of people from Toronto coming to the 905 areas. In this instance, I'm going to highlight Hamilton because that's our area of concern. And Hamilton house prices explode amid COVID as Toronto buyers leaving community worries behind. Lack of listings keep Hamilton, Burlington real estate market red hot, and that's absolutely true. So this chart is the latest RAB stat for the latest month of September. So RAB is the Realtor Association of Hamilton, Burlington. And no matter where you look, no matter what area of Hamilton, whether it's this downtown core or any of the suburbs, number of sales and average prices are absolutely skyrocketing. And one of the reasons is lack of listings. Just this past month, sales have been up 50%. Values have increased for homes by 15 to 20%, depending on what month you look at since COVID. And listings are lower 40% this past month. So there's less supply, more buyer demand coming from outside areas, and it's really putting a really huge pressure on Hamilton. So how does this look at multi-residential? How does their supply look? And this goes back to these huge multi-residential purchases that we've been seeing, not just this past quarter, but previous quarters as well. And this isn't anything new, but it's becoming more prevalent now in COVID because it's really seen as a stable asset class. And overall, there's a huge shortage of housing in Southwest Ontario, really, and really Toronto. So again, studies suggest Toronto's rental shortage will skyrocket, home building at its highest level since 2017. So even the big brothers recognize this as well, and they really can't keep up. New reports suggesting that GTA could be facing a shortage of 200,000 rental apartments within a decade. So they've been saying we've been building about 21,000 rentals a year when we really should be at 42,000. However, interesting enough, the condo markets in really huge urban centers like Toronto are seeing a lot of softness right now. And this is attributed to a variety of facets. Number one being immigration. We're really seeing that these gateway cities like Toronto, Vancouver, biggest cities are gateway cities for a lot of immigrants looking to find work. And immigrants are naturally attracted, I guess, to condos because they're the easiest barrier of entry for housing. Another reason is tourism is very much down. So there's a huge swath of Airbnbs and short rentals that would be occupying condos. These are being listed back out into the market for long-term rentals, so inundating the supply. And then lastly, students. Not as many students are able to go to the universities or their colleges or respective educational establishments and are learning from home. So they're less likely to occupy these condo values. And only very, very recently have we seen that values have started to depreciate in Toronto. And that's because rents are also starting to depreciate in Toronto rental values. However, all of this said, again, builders bet on rebound in North America's fastest growing city. They're alluding to Toronto at this point. And oddly enough, this isn't happening in Hamilton. Hamilton is actually one of just 10 Canadian cities you see rent prices increase. And this is situated to be, or presumed to be a lot because of, again, this really migration from Toronto, having confined spaces for higher prices and coming from Hamilton or not any 905 region, Niagara, Kitchener, and getting a little bit more bang for your buck. And this is actually seen a hardness on rental prices. And again, touching on immigration, we talked about it last quarter, but Toronto is now the fastest growing metropolitan area in the United States and Canada, just past Dallas and Fort Worth, I think that's what it's called. So we're huge fundamentals. You have the fastest growing city in the world, low supply. And this is really, in my opinion, why you're seeing these types of numbers that are hitting in the housing market, no matter where you look at. And immigration is such a huge portion of it. This headline, the second one right here, was just released on Friday. Trudeau targets higher immigration despite pandemic travel curbs. And even the feds recognize this as well, very much so. And they really want to get the borders a little bit more flexible, I guess, from immigrants to try and help stimulate our economy a little bit more as well. And then we've touched on this in previous quarterly updates too, that based off the OECD findings that Canada attracts the most well-educated immigrants out of the OECD. The OECD is a conglomerate of mostly first world countries. which is great to see. And a lot of these types of new immigrants follow in these kind of tech sector roles. And we've been seeing in Kitchener and Toronto, some in Hamilton as well, really a variety of cities, but mostly Toronto. And as you see these headlines, Toronto is emerging as a tech superpower as immigrants choose Canada over the US. Tech workers are living the American dream in Canada. And I thought this was fantastic. This is by Toby Lutke, if that's how you actually pronounce his name. He's the CEO of Shopify. He released his tweet after President Trump kind of restricted work visas there, basically saying Canada is a great country. We're very hospitable. We're willing to accept anyone. He himself is an immigrant from Germany. So just great to see that Canada is really kind of pouncing on this opportunity. And I see a bright future for not just Canada, but obviously Toronto and in our surrounding area for our commercial real estate market and residential market. So how does this impact other assets classes of commercial real estate? So employment space, LWP, live, work, play. I see this being a huge factor. There's huge headlines about malls just absolutely crumbling. They're going to be thrown to the wayside. As you see this highlight here, online shopping has doubled during the pandemic, says StatsCan. So obviously this is providing less foot traffic to the malls and obviously less business, and they're gonna get hurt bad. So there's really two approaches I've seen that these large REITs that own these types of properties are really doing. So you have types like Ivanhoe, Cambridge, portfolio overhaul means less retail office, where they're trying to reduce their exposure, try and sell some of the retail and office spaces. And then you have businesses like RioCan and Quadreal, which are submitting these huge proposals, are really injecting multi-residential and really making whole massive mixed use communities, really. So in this instance, this is an Etobicoke, this image. This is a proposal by Quadreal, 12 hectares of land, 9 proposed towers, 4,000 units, so absolutely massive. So they're really trying to take a proactive approach of protecting themselves of their existing mall. This is an existing mall. And again, putting multi-residential on it, having some office, so it's a true live, work, play, and having all these kind of natural and healthy lifestyles. We're having a bike path, they have a park there, and among a whole swath of things. So it's really interesting to see that these really big owners of retail are really trying to position into multi-residential simultaneously. And then the other big employment space is industrial. And right now you're really seeing, in my opinion, industrial really bifurcate into two areas. You have the huge warehouse type spaces that Amazon is going for. And we see these highlights here. Amazon plans to put 1,000 warehouses in neighborhoods. This is for the US. And then you have the other side where it's becoming just in general employment space. So where you typically would have your main street retail and you're paying maybe downtown Hamilton 30 net. Why do that when you have less foot traffic right now? And maybe go somewhere in Dundas, an industrial area where you have just the same amount of uses. You're a little bit more reliant on online and you pay half the rent. And industrial currently is the cheapest acquisition or valued asset. So you're seeing a lot of people buy industrial, and you're seeing every type of use inundate these industrial spaces. So it's not just oil stains and elbow grease in an industrial unit. You're seeing offices, you're seeing breweries, you're seeing anything operate at these spaces, and it's because they're the cheapest place to lease right now. And you're seeing their value skyrocket because of it. But back to the former, these huge spaces, Panattoni industrial pipeline, 6.1 million square feet, much of it spec. That's in Ontario. So that means they're building on speculation. That means there is no lockdown lease right now for these spaces. They're really building a majority of their 6.1 industrial just on the thought that it'll eventually get leased. That's how hot the industrial market is right now. And specifically with Hamilton, it was announced earlier this quarter that 855,000 square foot warehouse is going to be built right by the airport by Panattoni for Amazon. And in addition, a 50,000 square foot delivery center is being planned for Stony Creek for Amazon as well. So huge investments for this type of industrial space. And that really leads me to my last slide. And the fourth largest acquisition that occurred was 50 acres of land on the perimeter of the airport. Hamilton Airport was the fastest growing airport in 2018 in North America. And it currently is the busiest nighttime cargo airport in the country. And this is why you're seeing the last 2 years, huge swaths of land getting purchased by these commercial developers to really get in the action of recognizing this demand that's being pushed by online shopping to really occupy these space. DHL is building a site here. Rice Construction Group owns a site here. Panattoni is building right over here for Amazon. There's a number of others that elude me right now, but so many more. This most recent one is by BD. BD is a national sized commercial real estate developer. So easy to think that that's going to be eventually some type of warehousing. They purchased it for $200,000 an acre. And this is seen as the precedent for the value of the land right by the airport right now in Hamilton. And a lot happened in Q3. I went through a lot, and there's a lot I didn't even get to touch on, like HUPEG consortium investing 500 million or committing 500 million to the refurbishment of entertainment facilities in Hamilton. MIP landed a big tenant for their new Spectator building. They released their master plan. Positive news for LRT. I didn't talk about any proposed developments that were happening in Q3. So if you have any questions about that, please feel free to say it in the chat, or you can email me through the event calendar invitation. I think my email is in there on our Forge and Foster's website. So a lot to talk about and really to touch on anything or talk about any topic at any time with anyone. So with that, I'm going to say thank you, and I'll pass it on, Ben, to continue the presentation forward. Thank you.
Awesome. Thank you very much, Alex. Quite a bit to unpack there. A huge quarter. Do we think it's going to continue going into the fourth quarter? What are you seeing on your side?
That's a $1 million question, right? Like some people are thinking that Q3 might be a bit deflated. Some people thought Q2 because of the summer month, but what we saw was that there was just a really a backlog of attention that was really being put forth and projected further into the year. I do think we're going to see a slight decline in Q4, much to the fact that there's just been such a huge wave that's been released due to the pressure buildup of inactivity during April, during the beginning of COVID. And plus we're getting into, I guess, flu season. It's going to put some people a bit wary of what that actually means, if it's actually flu or if it's actually COVID. Weather's also being a detriment too. The winter is typically not a great quarter for commercial real estate transactions or just general transactions in general. Yes, I think there will be a slight decline. It won't be as hot as what we've seen, but it won't be a huge drop off by any means at all.
Right. Well, certainly it's been an excellent quarter for investment. Certainly good signs for Hamilton in the future and Canada in general. And I guess that is a good segue into the main theme of the conversation today, a theme that we as Forge and Foster have certainly seen and are getting in front of. And with that, it has led us into conversations and relationships with both of our speakers here today. And certainly us as asset managers, we're learning the space. And are fortunate enough to deal with two kind of excellent contacts in this industry who are helping us navigate this kind of leading industry. I think that is very positive for Hamilton and very positive for Canada. But I'll let our speakers dive in and give us a little bit more insight, certainly from both from an asset management level, but also as just a kind of a typical consumer and resident in Hamilton. Certainly some interesting things to unpack. And so with that, I think our next speaker is Jeff Anders. And so with that, I'll hand it over to Jeff and look forward to hearing a little bit more about Aeon and plans in Hamilton and kind of the future of film as a whole as well. So welcome, Jeff. Jeff, you might be still on mute there. Just didn't hear that start, but
how do you guys hear me now?
There you are. Perfect.
Okay. Well, hopefully the more insight comes out in the rest of my presentation than in the first few seconds. I just said thank you, Ben, and thank you, Alex. And I was just in the midst of saying that it was a pleasure to be sitting on this panel with Debbie Spence from the city of Hamilton. And so, guys, let me just quickly, I guess, introduce myself. My name is Jeff Anders. As Ben said, I am one of the co-founders of the Aeon Studio Group. Our mission as a company is to build Hamilton, Ontario into a hub for television, film, and digital media production. And we've been working with the city of Hamilton, as well as many local companies, the local academic institutions, various NGOs, and the governments at all levels to make that happen. We will have some news about our plans coming in the next couple of months that will start to bring some increased film activity to the city. Can't talk about that just yet, but that is who Aeon is and who I am. So I'm gonna kick off my remarks today just by kind of introducing the film industry in Canada, the film industry, frankly, globally and in Canada. And then I will pass it off to Debbie, who will talk about the creative industries in Hamilton. And then Debbie will pass it back to me at the end just for a couple of comments about Aeon's plans in Hamilton over the coming years. So starting off, I think the big story is just how quickly this industry is growing globally. And what has happened is there was a pretty staid kind of pretty low growth industry with the entertainment industry or the content business before the arrival of Netflix and the other companies that have changed the model and disrupted that business entirely. And essentially what they did was they cut out the intermediary companies that were gobbling up a lot of value in the value chain and freed up, in the US at least, about $50 billion a year by being able to sell to the viewers directly. Is what Netflix does. Is they make the content and they sort of distribute it directly to us. They don't have to go through NBC or anybody else. And in doing that, have really saved a lot of money that they have parlayed into the production of content. And the reason they've done that is because their entire game right now is how they can sign up as many subscribers as they possibly can. And signing up subscribers is essentially a function of who has the best content. And so what you can see on the slide here is there is a hockey stick type shaped curve here in what is being spent to produce TV shows and movies. And you can see how Netflix is, which came out of nowhere, 5, 6, 7, 8 years ago, will be spending more in 2022 than Disney spent in 2017. Disney, which has been around for however long it's been around. And so all of this is driving just a massive demand for the people who work on producing films, but also the infrastructure that it requires. Studio buildings, for example, is kind of the big one. And if I can sort of leave you with one idea that really kind of crystallizes why so much more content is needed, you can imagine, 10 years ago, everybody watched the same thing on CBS at 8 p.m. And the same thing on NBC at 9 p.m. And everyone watched kind of the exact same thing in every time slot. Now, every single person can be watching a different thing at any given time, which means the libraries of content now need to be just that much bigger. So if we look at the next slide, you can see that this is a very significantly sized business in Canada. The Film Office in Los Angeles did a study in 2018 that showed that they looked at the top 100 grossing US films in the prior year and looked at where those films had been produced. And they found that 20-something% of them had been filmed in Canada, which meant that more of those top 100 grossing US films had been produced in Canada than in any other individual country or any individual US state or other country. So more of those films were made in Canada than in California. And so you can see how this translates into value in Canada. This is GDP, and so direct spend and sort of indirect spend of $13 billion of GDP. It's the equivalent of almost 200,000 jobs. Just a massive, massive industry. So you can click to the next slide here. We'll see that the benefit of this over the last call it decade, has not accrued equally or proportionally to the different jurisdictions that participate. Ontario back in 2011 was by far the biggest center for film and TV production in the country. And then over the last several years, you can see how BC has really grown the scale of its industry, while Ontario has kind of grown at a very, very slow pace. Now, there are a couple of reasons for that. The BC is in the same time zone as LA. It's relatively closer to LA. So as foreign productions have set up shop in Canada, they have increasingly chosen British Columbia. But there is an infrastructure problem in the province of Ontario that has been as important a factor in all of this. The fact of the matter is that Ontario does not have the studio space that is required to essentially host these productions, or frankly, productions from Canada. So it's not just the American productions or foreign productions that can't find space, it's the Canadian companies as well. What you'll see on the next page is a snapshot of the soundstage capacity in the Greater Toronto and Hamilton areas. At a time when the industry was exploding over the last, again, call it 7 years, say, the capacity of soundstage square footage has actually declined because people who own those buildings sold them for other purposes. The quality of the soundstage stock was quite low, and some of it had to be retired. And so what we're seeing here is a situation where there is massive global demand, hundreds of millions of dollars of economic activity that want to come to the Toronto and Hamilton areas, but essentially knocked on our door, and we had to say, well, we're sorry, there's really nowhere for you to set up shop. That Toronto problem was really an opportunity for Hamilton and an opportunity for other Ontario municipalities. So on the next page, what you can see here is that while the sort of the volume of production activity in the Toronto area, which really should be the most attractive place for productions to set up shop, has been relatively flat, or was relatively flat, from 2013 to 2017. And again, the reason for that is, again, it's just simply there was no studio space for anybody to set up in. And so the productions had to go elsewhere. But what you can see is that the rest of Ontario has seen, off a relatively small base, saw a tripling of activity between 2013 and 2017. And Hamilton is a big part of that picture. And the reason for that is two things. One is some tax credits made it attractive for productions to film outside of the core Toronto zone. So at the moment, the way it works is the government reimburses productions that film here and use Canadian labor. Some portion of their labor costs are just sort of reimbursed to them. And then if those productions spend some number of days outside of the core Toronto zone and spread the wealth out to other municipalities, then there is a bonus reimbursement on their eligible labor costs. But the other thing, frankly, was that the infrastructure was provided, and then there were some very hospitable and welcoming municipal governments, frankly, and communities that were there with open arms to say, come set up shop here, come leverage all the talent that we have. And so I think it is an amazing success story, and one that I know Debbie is going to tell you about next in just a moment. But I have to just say that from the perspective of the film industry, what the city of Hamilton has done for the provincial and even national film industries is absolutely remarkable. And I tip my hat to you guys. So on that note, I'll pass the floor to Debbie. Thank you.
All right, thank you, Jeff. And thanks to Ben and Alex for inviting us to be part of the presentation. I think I'm muted. What I wanted to kind of share as Jeff was chatting about is the context in terms of Hamilton, where we're going as a city in terms of the corporation, and then city kind of the kind of macro piece of that. So, and the next slide is just some of the topics that I wanted to talk about is kind of contextualize generally a bit of its a kind of interest in terms of how the industry works, so you can understand the bits and pieces in terms of the city's role, but also in terms of residential and in terms of commercial and industrial and the different types of companies and businesses, and then just the different elements in terms of that. I know people are always interested in the stats. I will share probably more verbally in terms of what we're seeing for this year, because we don't have all of those calculated for 2020. And then just some of those bits and pieces in terms of the social elements, but also the economic elements in terms of film. So some people ask in general, like, how do you make a movie? And then also kind of positioning in terms of where the city assists. So there's generally about 5 kind of general steps in terms of there's an idea and concept. And sometimes cities will actually work with individuals to bring those ideas to fruition, or to encourage them to consider their city or their country or their province or state as a place to actually film. So it can be a long kind of game in terms of that process. And then it's just it's general sense of awareness. So the more people are aware about a city and a location, the easier that it'll come to mind in terms of, oh, this is a great place to film. Positioning in it as well, I think Jeff mentioned this too. When you look at the film industry, it's the productions that are coming to a city that are bringing the business and that create the reason for the bricks and mortar businesses like a film studio, like a prop house and so on, to actually establish themselves in a city, and the same thing with the workforce. So you'll see some of these elements in terms of some of the stuff that we do in terms of we're obviously assisting with the workforce and the crew, not necessarily for the productions, but the pre and post pieces. We will assist with locations and scouting. And as I kind of mentioned, local businesses will benefit. So not just film businesses, but periphery businesses will definitely benefit. And you'll see some of those calculations in the other kind of slides. And then obviously end it off with, you're actually going to see the production. We used to obviously go to the movie theater more frequently, but this is where that content is coming out in terms of the end product. And then just in terms of the city's role, like what services we provide. So my role is the business development consultant. And what I do is I work with businesses that are looking to build their bricks and mortar businesses here. So they want to set up and they want to pay property taxes. They want to hire people locally. And so I'll walk them through that process of locations and so on. And then also we have an eye to workforce development. So we often partner with colleges and universities and trainers. For film, where it's a bit different, is there's the union element to it as well, which is really beneficial. Then we do provide some industry support. So if you are a property owner, we can provide some assistance in terms of accessing resources, but we really kind of provide that to the location scouts and the film industry that are looking for those products and services, which kind of takes us on to the permitting. So the city does have a film office, and that staff does help with finding some of the locations and then helping the productions film here connect with the right resources and also navigate and balance some of the tricky kind of situations when it comes to things like road closures, residential concerns, and those kinds of things from there. So for 2019, our film stats include, so the way that we calculate, so the first bit is 60 million is generated in direct spend. So when productions come to the city, and this is what similar to what other cities do if they have a film office, is they will ask the productions how much money that they estimate that they will spend in a community and spend in their city. So it's anything from as I kind of mentioned here, is hotel stays, maybe in terms of the residential properties they may want to rent or that kind of facilitate from that process, or commercial. Industrials, our business improvement areas also receive donations from the productions. And then there's obviously city-owned facilities. There's a number of productions that have filmed at City Hall. And so there's fees and stuff that are associated with that. Often people don't realize all of the different opportunities, and it's true direct spend as opposed to your, in terms of that multiplier effect. Last year, we had 140 productions that filmed in Hamilton. So TV series, feature films. We get about an equal distribution of foreign and domestic in Hamilton, which is actually good, healthy balance, because you obviously don't want to put all your eggs in kind of one basket. It allows us to assist the local labor force in terms of the domestic productions, and then support those domestic Canadian-based or Canadian-US-based productions grow. But it's also great to be featured and be part of that foreign labor force. And then I've kind of noted here, so we, like pretty much all of Canada and all of the US and internationally, everyone shut down filming because of COVID. We were shut down from mid-March till July 4th. What is the really good news here, and what we had projected, is that once we started opening up and allowed film productions to come back, and as they were able to be safe because there was COVID requirements, that was a new element that was never part of film production in the past. We've got 98 registered. So that's pretty close to the 140. So we've seen significant number of productions come into Hamilton post our shutdown in July. And then in terms of what the productions, in terms of the permits, it was 790. Hamilton has, as Jeff was talking about, this isn't a blip. So this isn't like a 1 year kind of thing. The film industry has been growing for the last 5 to even 10 years. Some of it does have got to do with the change in terms of the content, but this is something that we've seen increases and stability within Hamilton for a very long time. And again, just Alas is about the number of days that they actually spend in Hamilton, which kind of, again, that talks about the actual spend of money and finances. Some kind of, again, high level bits and pieces in terms of the film industry in Hamilton. So we recently undertook what's called a sector profile. We wanted to get an understanding of, in terms of creative industries, where our strengths were and where our opportunities are. And where we're going to measure. So this is about generating jobs. This is about tax, non-residential tax assessment. It's about kind of growth. So in terms of film, there's 900 film businesses in Hamilton. There are 9,140 people that live in Hamilton that are in the film industry. They perhaps don't always find work within Hamilton. They have to go to Toronto, but that's a pretty substantial workforce. We do, as Jeff was mentioning, Ontario in particular has a major shortage with regard to film crews and talent. So our role is to try to help grow that and partner with various people to do that. Hamilton being the large cluster of film businesses, which is really kind of essential. What I had forgotten maybe to mention is Hamilton is probably the 3rd highest number of permits in Canada. So we're second to Toronto in terms of the quantity of productions that come here, which again, we've got the stats and we've got the data to kind of back ourselves up. What sometimes is important, which is kind of the 4th point, to our city council, is the money that it generates back to the corporation, which can help offset, again, that non-residential tax assessment. And in 2019, that was $500K. And then we have the 3rd largest employment growth in film in Canada, which again is pretty significant. And the businesses that I deal with, which is what makes this industry very unique, is tourism might be a little bit the same, music slightly, but the industry visits us because they're on location, developing their productions. And so these are the individuals that actually act as visitors. And now they actually see the city and they decide, oh, I want to actually move here as a resident. But more importantly, they want to invest as a business. And so we see 85% of the calls that come into my line are people that have actually filmed here. So that says a lot about what Hamilton has done in terms of the film industry and how it's a bit different than any other sector in terms of that consistency. So I like to have this one. Most people have, probably seen this production. It wasn't filmed in Hamilton, but in terms of film does bring in the economic and that direct spend to Hamilton. So it's not all about, kind of what you see on television. It's about those labor force, and there's that money left in the community once they leave. And often film does also provide social impacts as well, and some benefits, and those are on the next couple of slides. So again, as I was mentioning previously, this is a different type of industry, and we're able to, through productions, attract those businesses and to benefit the local economy, and to demonstrate that year over year, especially with the film permits and some of those data, and demonstrate that there is a strong employment and labor force, that if we're proactive, that we can actually manage and grow. So the kind of fun part that sometimes we see, and also where the film office tries to balance. So we want to say yes to productions. We want them to come to film in Hamilton. And we have been known as quite welcoming and hands-on with productions. But we also have to balance the sometimes negative or perceived negative impacts. So it could be something as simple as road closures. Residents might see those as a nuisance, or just they don't get the kind of the industry. So we will work with the productions to perhaps in some cases kind of give back, or they naturally do give back to communities. So some of the images here kind of demonstrate what film productions have done to actually leave lasting impacts, whether it's something physical. So in the top middle image, there was one production that actually they repaved a parking lot in a park that was in much need of repairing, but we weren't as a city going to be repaving that for a little while, but because the film production was coming in that wanted to use that, they said, okay, we're going to repave it. So the neighborhood really loved that. So there's those small things that seem small, but really kind of show those additional kind of social benefits. Another one of the image is there was a production that was in a neighborhood that was a lot of kids. They brought in actually an ice cream truck as part of, again, their kind of production. A lot of film does have that kind of goodwill, and they want to develop a sense of community, a sense of place. The image at the bottom of the screen, that's one of a popular productions, Umbrella Academy. A lot of their crew, they use their per diem, so the money that they have to spend throughout the day, and they actually visit themselves as crew. They will purchase food, they will buy gifts. There was one person on the crew that she lives actually quite far away, and she continues to come back to Hamilton to get her haircut. So those small little stories in terms of, kind of good news pieces. And it also demonstrates that it's not just the film industry that has those impacts. There's the candles in the middle, or they look like bricks, but they're actually candles. And the production actually purchased those candles for their crew as a thank you. So it's kind of that piece in terms of Hamilton that you might not find in a different city, which is kind of cool and definitely unique. And again, something that film can give back that perhaps other industries, it's a little different in terms of that perspective. So I'm gonna kind of run through just a few, just of interest, because a lot of people always ask kind of what's going on, and we're certainly open to questions if you're interested in what's filming now. Usually we don't say now, we kind of say what's kind of filming, because we don't like to draw too much attention to having like people come down, especially during COVID, when stuff is being produced. But I'll just run through some of there's just a couple of slides in terms of productions. that you may not know were filmed here. So there is a production from Netflix. So we've got a lot of Netflix series that are filmed in Hamilton, and we're the core location. So oftentimes it's presented as filmed in Hamilton or filmed in Toronto or GTA. But often we're like, yeah, we were the main location, but we get it. Most people understand Toronto, in terms of Canada, Ontario. That's fine. But for us, we like to really promote in terms of some of these substantial productions that have come here. And especially when it's a film, when it's a TV series, these are productions that are going to come back year after year after year. So there's that really sustained kind of piece. You may have seen Run, which is actually coming back for a second season. That's HBO and Crave. Mrs. America, so that was a mini series, not a TV series, but again, pretty popular, pretty political program, and that's FX and Hulu. Nurses, they're actually back now for their second season. We're their hospital in terms of that key location, and then we've acted as another main locations for that series. And again, that's nice because it's domestic and it's Canadian based. Self-Made, another one that came out during COVID. We had a lot of really cool locations. People like Hamilton because of the diversity in our architecture. We're small and compact. We have natural heritage, and then we have the actual architecture. And a lot of times we can kind of dub in or fake for Detroit, Chicago and cities like that as well. And even on occasion, would be like Brooklyn as well. And then just kind of what's next, kind of what we're working on. Jeff had mentioned too, in terms of some of these, the figures. So we have, we've looked at, it was, I think 2.5 billion that was during COVID was unspent. So when we were trying to predict or estimate like what was going to happen once we were able to open up permitting again, we knew that it was going to be kind of slow because the industry itself was trying to catch up with all of the regulations, and then it was going to be steady and then really, really significant. So that has borne out in the stats, as I mentioned previously. I'm still working with a lot of businesses, and this is not dissimilar in other sectors as well. We've seen, as Alex mentioned, we've seen a lot of investment in Hamilton over not just film, but in other industries. And it's been pleasantly surprising in terms of amid COVID. And then we're looking obviously to how can we increase opportunities with businesses to assist in the overall recovery. So how can we connect restaurants? How can we connect small businesses with the film industry so that they can spend their money in Hamilton and be aware of all the different opportunities here? And then, as I mentioned, so we're back to issuing permits in July, and we continue to be the second busiest city next to Toronto in terms of productions. And then we're continuing to understand how we're going to build a strong workforce. There's going to be a research paper coming out in November that will help kind of understand what those specifically gaps are. We talk about just a general shortage. This is going to drill into it a bit more. So hopefully that will just continue on our trajectory in terms of what we understand and what we can kind of strategically move forward with. So I think that's the end of my part of the presentation. Certainly happy to answer questions afterwards, but I'll pass it back to Jeff.
Jeff, we're having trouble hearing you again.
How about now? Still no? No?
Perfect. No, that's good. Unfortunately, this is live. Otherwise, we'd do a take two type scenario, but I'm sure I can hear you now.
It's okay. It's all good. So, okay, yeah, not much more to add. I think I'll just take a minute to just say that in light of everything you've just heard, my partners and I at Aeon Studio Group are hoping to build about 500,000 square feet of production space in the Hamilton area to support the growth that is already underway, to capitalize on the on-location filming that is being done in Hamilton today that Debbie talked about, and to support the growth of the sort of I guess the Ontario film industry and the Canadian film industry more broadly. We're working closely with the City of Hamilton on the Martin Tiffany lands and hoping to build a real community there for the creative industries broadly defined. And I have to say, it's been a real pleasure working with and getting to know the team at Forge and Foster, Mark and Joe Accardi and the rest of the team, who are clearly champions of the City of Hamilton and who believe in its future and investors in its future. And hoping to be able to work with you guys more and more over time as Aeon achieves its goals in Hamilton. So thank you very much for having me, and happy to answer any questions.
Awesome. Thank you very much to you both. Certainly a lot to unpack as well. We do have a couple of questions though, and I'll start with you, Jeff. A question from our audience. It says, Jeff, do you expect film subsidies to reduce given that government must spend money in other priority areas? I'm assuming at this time with quite a bit of spend allocating towards relief from COVID. But do you expect those film subsidies to go away or increase? What are your thoughts there?
I think we do not expect those tax credits to be taken away. They are critical for economic reasons, but also cultural ones. And we've seen that the ROI on that government investment is really high, and we've seen political support at all levels for it. We'd be very surprised if very surprised if those tax credits were taken away. And frankly, we've heard nothing from any of the parties, the major parties, about taking those away. So, of course, there is a deficit here that needs to be closed in terms of the government spending. We just don't expect this to be one of the buckets they draw from.
Good to hear. I have an additional question as well. You talked a bit about largely the streaming giants who have obviously been committing more and more capital as sort of a chase for market share. But have you seen some of the larger incumbents, some of the kind of the older guard in the film industry? Are they coming to Hamilton and to Canada as well? Or is it primarily these new streaming giants that are committing more of the investment and capital into the areas?
If I understood the question correctly, because of just internet disruption, I think you asked, is the boom being driven only by foreign providers, or is it also being driven by domestic ones? Is that the question?
Not entirely. I think for the question, it was more about the kind of the streaming giants, the Netflix, the Disney Plus, the Prime, the Craves. Are they primarily leading the investment into Canada, or are the kind of the older incumbents, the older studios, are they coming here as well? What's the kind of the breakdown that you've seen on your side?
Jeff, do you want me to take some of it in terms of, I know the side for permitting. So in terms of, we certainly have seen an increase in terms of Netflix productions and Hulu in terms of Hamilton, but we've also seen a consistency in terms of domestic and then what we call kind of feature films, which are usually like foreign in terms of where the money comes from. So we still see those as well. I'm trying to think if I can remember a few like major kind of productions that came to, like Spotlight filmed in Hamilton in terms of major feature films way back when, Hulk. So there still are major studio productions that are coming to Hamilton for sure, but it's that again, it's that balance in terms of we're seeing both, but there's stuff that's shifting in terms of some of the content.
Awesome. That makes sense. And then Debbie, if say I own a property, I'm an owner in the Hamilton area, and I'm interested in getting my property involved in film. What would be my best first steps? Is there a database that I can put my property on, or do I just reach out to the city? What's that process look like?
Yeah, for sure. So the province, so there's something called Ontario Creates, or the Ontario Film Commission, and they have a locations library. So you can connect with that organization, because we refer off that. We don't want to create our own. Plus, we do know when productions come in, they land in the Ontario first. And so we want them to see Hamilton in that, as opposed to them drilling into Hamilton. We do our own promotions for coming to Hamilton, but it's better for people to see it initially as the whole suite of Ontario when they come in. But it's fairly easy in terms of, it could be a commercial, residential property, also a business. So if you're going to service, then there's another database that's for film related businesses. So if you're going to service, so it could even be, like a enterprise car center from Hamilton, you can post on there, because for transportation is actually a huge part of productions budgets. Or if you're a hotel, even Airbnbs, you can put your products and your actual services on Ontario Creates as well. So if you just Google Ontario Creates locations library or business directory, you'll find that spot.
Awesome. No, that's very insightful, and certainly from the business side as well. We'll post that link in the comments for anyone who's interested in learning more a bit about that process. But Debbie, if my property is chosen as a location, what kind of happens from there? What should I expect as a property owner, and would I work with you on that, or would it come through the investor or the studio? What's that process look like?
Yeah, so typically there'll be location scouts or location managers that are looking. They might contact people and they're like, hey, we're interested, or do you have an offer? Like, we had a request for an office space that kind of looked like New York City. And so you'd be contacted by the actual production company themselves. Usually it's the location manager, and then it's the locations manager responsibility to then go through the city to get their film permits and all those kinds of things. You typically don't work directly with, we'll work more if you're a business looking to work with the industry, as opposed to a property owner. But if you have questions in terms of what is the industry looking for right now? Sometimes that's hard to say in terms of the types of productions. We get a lot, Hamilton and Ontario tends to get a lot of horror, science fiction, superhero types of movies. So it can be really kind of broad. People are even looking for vacant land for parking, or they want to they get really innovative. And as Jeff was mentioning, there's not the studio space right now. So they get really innovative and they will build the sets if they need to. On those properties or within those properties from there. But the film office, sometimes they're able to say, yeah, we've been getting a lot of calls about X, maybe warehouse spaces or certain residential properties. And so you can kind of get a sense of that, but it's whatever the film industry is looking for at the time, if that helps.
That does, very informative. And Jeff, you had something to add there?
You can hear me?
Yes, we can hear you now.
I still hear? Okay, great. So to say, in addition to what Debbie was talking about with respect to the Ontario Creates master directory, definitely table stakes for getting a particular location put in front of, or at least available for productions to find. My partners and I at the Aeon Studio Group are also working to promote Hamilton locations in order to make Hamilton more turnkey for productions to come out to the city and film here, there. And so if anybody is interested in talking about that further, you can always reach out to me at jeff.anders@eonstudiogroup.com. Maybe you guys can post my email address or something along with the presentation or something. But if you have a location that you think would be attractive to the film industry and you're looking for something like that, please do reach out, because we are building a portfolio and we are promoting that through all of our.
Awesome. No, thanks for that insight as well. Well, I think we've gone a little over our allotted time now, so I think this would be a kind of a good time to end it. But if you do have any other questions or would like some more information, please do reach out. Certainly an exciting initiative for Hamilton and a great opportunity. And so I would like to thank both of our speakers today, Debbie and Jeff, for providing their insight. And a thank you to you all who tuned in, and we'll catch you at the next quarterly update.
Okay, we're good.